Hi, welcome back to my channel. In this video, we're going to be talking about mortgages because a lot of community interest company owners may be considering getting a mortgage and they want to know how best to pay yourself to be able to qualify for a mortgage. Because from a CIC, you could pay yourself as an employed person or as a self-employed person. What are the advantages? And I know a lot of people make the mistake of thinking that there's a sole trader because they've got a CIC and they're not. In fact, having a CIC is a massive bonus if you want to get a mortgage. So I'm going to tell you what the little loopholes are and why this is a massive advantage for you if you are looking to get a mortgage in the next few years. So lots of great information in this video. I'm going to get into that in a moment, but before I do, please hit the subscribe button for everything to do with community interest companies, grant funding, and all of that. So if you'd like more information about setting up a CIC, I've got my course, How to Set Up a CIC and Get Grant Funded in 4 months, which is over on my website. Do go into the description to grab the link for that. That has propelled over 400 CICs in the last couple of years to open CICs and get grant funding. I mentor them over on my CIC Tribe membership. Go check that out, where you can ask me Q&As, and I do loads of different events. I've got different experts, loads of information about pay, guidance, taxes, all of that stuff over there. So that aside, let's get into this video. So here we're going to be talking about mortgages. Now, I know that a lot of CIC owners, when they set up their CIC, they've got in mind, oh, I'm going to be moving house, or I want to get on the property ladder, I'd like to get a mortgage. And they come to me and they ask, how best can I pay myself to be able to get a mortgage? So when you open a community interest company, a couple of things I want to clear up. You're not a sole trader, is the first thing I need to mention. You're a community interest company, so you're not going to be classed as a sole trader. That's your first major advantage. So if you set up an LTD, you're classified as a sole trader, and a mortgage company would ask you for 3 years accounts. That is not the case with a CIC. So that's the first thing I need to tell you. The second thing is, normally my advice is, when it comes to paying yourself from a CIC, especially in the early stages, is that you set up as self-employed and you pay yourself as a self-employed person, a freelancer. So your CIC would hire you as a freelancer to do work in the CIC, to run the workshops or whatever it is you're doing. So that would normally be my advice. And the reason why I advise that is because it's more tax efficient, because otherwise your CIC would have to factor in employer's national insurance onto the grant application. And of course that takes out a big chunk. So you don't really want to do that. So generally you want to be set up as self-employed freelancer, because you'd just be able to, pay yourself more to do more work, because you'd have more money to do that, because you wouldn't have that tax. But this is the big but. If you're going to be going for a mortgage, you don't want to do that, because as a self-employed person, you would have to have 2 or 3 years very healthy self-assessments to be able to prove your income is stable and at a certain level to be able to qualify for that mortgage. But with some people that's okay. Maybe you have got a very healthy self-employed business before you even opened the CIC, so that might be fine for you. But for a lot of people, that wouldn't work, and they don't want to wait 2 or 3 years to be able to do that. So with a brand new CIC, you can get a mortgage because you can PAYE yourself. So you're going to employ yourself in your CIC. So you employ yourself in your CIC. You've got obviously the grant funding in. So say you've got a couple of grant funds come in. At that point, you want to then make sure you budget your pay for yourself monthly so that you're being employed by the CIC. Remember to factor in those employers' national insurance contributions though to your budgets if you're going to do it this way. Factor that in. Then you're going to pay yourself PAYE. That will generate pay slips. You can get your accountant to do that for you, those pay slips, and organise that for you. Of course, on your pay slip, all the tax deductions will go out in a usual way that an employed person would have them come out. You then have your pay slips. Essentially, by this model, you've created a job for yourself and you've been able to demonstrate that you earn a certain amount of income quite quickly because you've got the grant funding in, you've hired yourself, you're then paying yourself monthly, you've got the pay slips. You can also get a letter from one of your directors to say, yes, you're employed, this is the salary, and then that's all the proof you need for your mortgage company to get your mortgage. So that is essentially how you pay yourself to be able to get a mortgage, and that's a huge benefit. Now, I have done that myself, and I can confirm that when I did it, I got that legal information about making sure that was all legit from my accountant. So that is advice that's come from my accountant. I've done it myself. I set up my CIC back in 2012, and within a year, because I've gotten enough grant funding, I hired myself, I had the pay slips, I was able to get a mortgage on my 3-bedroom house. I did do that myself, so I can say I am speaking from experience, and I have got that backed up by an accountant. If you're worried and you want a second opinion, go and ask an accountant if that's all okay. Go and ask your accountant and talk to them about that. So I always recommend on this channel, although of course I give good advice and I say to you, I do check it, I always say, do go and get your own independent financial advice first. I hope that was useful. Thank you for watching.